Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Fender, Senior Director of the Future of Finance at the CFA Institute, to discuss the present state of sustainable investing and how the sustainability trend of the next 5 to 10 years will develop. Rebecca, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be here.
ESG and sustainable investing are becoming staples when we talk about the evolution of investing, but let's take a step back and lay down some framework. What is sustainable investing? What are the three critical elements?
Yeah, lots of talk, like you said, about sustainable investing. And so when we think about what makes it different, there are really three things. So the first is that it is additive to traditional investment theory. So we often talk about risk plus return as how we evaluate individual investments in our portfolio. There's much more thinking now about risk, return, and impact. So it's sort of this 3D model going forward. Secondly, related to that is the question of how value will be created. And so many people, when they talk about sustainability, will talk about ESG, or environmental, social, and governance factors, and how this expands the view of how we think about good investments. And then the third differentiator is that it really takes a broader view of considering many stakeholders. So thinking about what are the impacts as the company goes forward on its clients, its suppliers, society overall. All of these have reflexive elements. So we think about the impact on society and the impact of society.
Why is sustainable investing so important at this point?
Yeah, well, sustainable investing has had quite a boom recently as people are thinking much more about the connectivity of things, right? So we've seen the history here in kind of three phases. So first we started out, even back to the 1970s, in a phase where people would exclude certain types of securities and investments that they just weren't morally aligned with. And then around the second phase was around the year 2000, slightly thereafter, you had the UNPRI startup. And with that, this focus on ESG integration. And so the question was, how do we take a broader set of risks and return opportunities into consideration? And now we suggest that there's a third phase starting now. In 2020, this growth of interest, it's not surprising that it coincided with the time of a pandemic when we see these connections around the world, how there are ripple effects to everything. And so, alongside that, we have looked at, what are clients asking for? How can the investment industry do a better job? And many of them are looking for more of these investments.
Let's talk about that. The CFA Institute released a new report, Future of Sustainability and Investment Management, with input from over 7,000 industry stakeholders, including 23 virtual roundtables structured around the acronym IDEA, IDEA. Rebecca, tell us more about that.
Yeah, thanks. So we looked at 5 to 10 years out, where do we think this important topic is headed? So the first section is around influences. And we again look at how things are different now. We find that 85% of our members that were surveyed, these investment professionals, are now taking into consideration environmental, social, and/or governance factors. So this is certainly not a niche area. It's very central to how people are investing. And again, we talked about the history of how this is kind of what we would call a threshold moment as people consider what are the pathways ahead. As we moved on to D, that's for drivers. And so we think about how sustainability may change the business models and investment models at investment firms. So again, we look at the client demand as one aspect, and then we look in terms of the investment model. What are the different approaches that firms are using to they're employing? And so we've talked about already ESG integration that really looks at these factors across the portfolio. We've also talked about exclusionary screening, where you might just take some things out. Other popular trends are around thematic investing and also best-in-class investing. So we see these growing more and more. We also see some differences by region. When it comes to E and the enablers, that is around data and talent. So the two factors you really need to come together to implement this well. And so on the data side, we find that there's so much data out there around this topic. There are efforts to standardize that data, but also massive opportunities to find new types of data, to use alternative data, to combine artificial intelligence with human intelligence and produce better outcomes for investors. Also then, once you get good data, you have to put the framework of judgment around it. There can be factors that can reinforce each other or can counterbalance each other. So you need to have that element there. And when we looked at the supply and demand of talent in the universe here, we found that looking at LinkedIn Talent Insights, we analyzed about a million profiles of investment professionals and found that less than 1% of them have sustainability expertise noted. And yet, when you look on the demand side of who the job postings are looking for, close to 20% of job postings for portfolio managers are looking for sustainability expertise. So we see a lot of demand amongst our members and others in the investment community to learn more on this. And lastly, there are ideas in the actions section. So what can the industry do? What can individuals that want to invest do to move forward? And how can firms adapt? So happy to go into more details there, but that's the basic framework.
Yeah, it's really interesting to see just how investors and investment managers are really shaping the future of this. So, Rebecca, what are some of the sustainable investing trends identified in the report?
Yeah, I noticed, or I would mention two in particular. One is that we continue to see a huge growth in focus on climate. So we talk about climate energy as one of our new scenario applications, and about 40% of investment professionals currently say they're using metrics and analysis around climate investing. But this still has a ways to go, and we're doing some case studies with different investment firms. We have some published to talk about what this looks like in practice. Another element is around the social side and the ESG, and we've seen a lot more interest in this area in recent months. And also, this is an area where there's been perhaps less specificity in how to measure these data points. And so there's a lot more interest in getting to that. I'd also maybe just mention one idea that I think is pretty interesting that we've talked about is the idea of hard data and soft data. So we typically think of hard data, very traditional data you might find in a company report. But soft data matters a lot too, and these are the sentiment elements. These are the things like you might get a survey response and say, well, that's interesting, but those are the things that actually matter a lot. As we see the trends going forward, people's opinions are shifting the market.
Yeah, and I think that's one of the challenges that's within the sustainability space. A lot of the metrics can be arbitrary because what might be good governance to you might not be to me. And that leads me to my last question. Where is improvement needed in the organizational and human processes in the investment management industry?
Yeah, it's a great question. And so we lay out some areas for improvement for the industry. It's really about improved thinking, improved technologies, and improved teamwork. So again, at the kind of at the basic level, there's a lot of room for improvement in terms of ESG education. We've actually just developed a certificate along with our UK-based society to give that to the industry so that people have those opportunities to explore that further. We also talk about this idea of system level thinking. How do you think about those connections more so that you recognize that your investments have a wider impact? And then we look at things like collaboration across the industry and within firms. So one of the challenges could be that investment firms have one or two people that are very knowledgeable about this space, but that knowledge isn't getting spread throughout the whole organization. And so I think you're going to see a lot more on that in coming months and years as firms figure out what this means for them and how they can really take advantage of the opportunities that are out there. And along with that, we'll see more improvements in technology. And finally, it relates to organizational culture. So this is really a new mindset to think about how can this benefit clients, the firm, and society overall as we think about sustainable investing.
All right, Rebecca, appreciate the insight. Thanks so much for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.